Today I'm going to talk about reverse mortgages because I'm seeing a lot of ads, and I think a lot of more people and retirees are maybe having to resort to considering reverse mortgages. So I'm going to talk a little bit today about how they work, some pros and cons of them. I do have a friend that if you are interested, you can email us at info@k4financial.ca, and I'll pass your information along to her if you're interested in learning a little bit more. Plus, we'll also put a link to a calculator that can show you approximately how much you could get from a reverse mortgage based on your age and the approximate value of your property. So, uh, you know, didn't really necessarily want to ever have to talk about reverse mortgages because they're just another way for the banks to use your own debt against you and make a whole bunch of money. However, in some cases, people are going to maybe need to consider this, even though there might be some other options available to you. And then I'm going to talk about a couple scenarios where I've actually recommended that people take reverse mortgages because of their specific situation. So I think that's maybe kind of like a fun idea where you can use your home equity because you don't need to pass things down through the estate. So generally speaking, you have to be 55 plus in order to qualify for a reverse mortgage. The one thing about them is that they're just using your home equity to base this number on. So it doesn't really come down to credit reports or income or other things. So basically, if you have CPP and OAS or a job or enough equity in your house, you're generally going to get approved for a reverse mortgage. The rates are going to be higher than they are with like traditional mortgages or HELOCs. So in a more ideal world, what you would do if you were thinking you might have to reverse mortgage later in retirement is while you're still employed and you have equity in your home to set up a HELOC on your house. And that way, then if you need access to some of that money, you can get it, because it's going to be way harder for you to do that if you don't have employment in retirement or enough income. So reverse mortgages generally have interest rates that are about 1% higher than HELOCs and about 2% higher than your traditional 5-year fixed rate mortgage. It is going to be tax-free money. This is money that's already yours. However, when you take it out, the interest is going to build up on the loan that you took out. So let's say, you have a $1 million house and they're going to give you access to 50% of it. Generally, what I'm hearing is that the loan to value that you're going to get is somewhere between 45 and 65%. So they're talking about usually around 55%. You could access $550,000 in a reverse mortgage, and then you can start taking that out in monthly chunks or one big lump sum, which would probably be a mistake because then you'd be having way more interest building up on the entire $550,000 for the remainder of your life. Then when you pass away, the house is going to sell. They're going to pay back what's owing on the reverse mortgage, and then your estate is going to get the remainder. So the biggest issue with this thing is that you are going to reduce the estate that your kids are going to get, or your beneficiaries, because there's debt owing on this now. And what can happen, which is kind of ridiculous, but within the terms of the reverse mortgage, sometimes what's going to happen is your estate has not settled in time and the reverse mortgage needs to be paid off before the estate is settled. So then you're going to get into some financial trouble with the reverse mortgage lender because you haven't been able to get this through the court system fast enough. You're probably going to be penalized. There are ways that you can default on your reverse mortgage. Usually this shouldn't happen. But one thing is if you allow your house to go into like complete disrepair, so you're basically reducing the value of your home, well, you could potentially default on your reverse mortgage. If you use the funds for illegal purposes, you'll default on it. I think that's pretty self-explanatory. Have a dishonest application. I think a lot of these predatory lenders are setting up dishonest applications, which could get people into trouble, and not following the contract. So depending on which lender you go through, as far as Rhonda has told me, they're going to have different prepayment terms, different things. Some of them are going to cover the upfront costs to get a reverse mortgage, like the appraisal costs or the legal fees or the closing costs or whatever there are. A good thing about reverse mortgages is they're not going to impact OAS or GIS in any way. So if you are an OAS and GIS recipient, you can also get potentially this tax-free money that can be added to your income every month, but it won't impact your GIS or OAS. Some options to consider other than a reverse mortgage, well, you could obviously potentially downsize, but I know sometimes that doesn't free up as much capital as people are wanting. You could sell and start to rent. Sometimes I've talked to clients about that, where, you know, they can sell, get all this equity, have a whole bunch of cash, and then just use that as their income later to actually fund their retirement. You might potentially be moving into an assisted living facility, which then you're probably going to need to sell your home to access the equity. And like I said, the other option is before you retire to set up a HELOC on your home. This would be more manageable by you. You would only be taking out what you needed. You could prepay it back without any, terms and conditions that are involved in the reverse mortgage. So I'm not saying that this is certainly for everybody, but it is something that some retirees are certainly going to have to consider. And I think it's something that you might want to talk to your financial advisor about, and then have a conversation with a mortgage broker that can help you learn a little bit more if this is for you. So I would certainly consider putting it into some financial plans if it's necessary, but you're going to need to know the pros and cons of getting a reverse mortgage and how that's going to impact especially your estate if one of your goals is to be leaving your home to your children or your beneficiaries, because that is certainly going to reduce the amount. Now, the times that I have talked about reverse mortgages to clients, this just happened last week. I have a guy in Vancouver who's been renting very inexpensively for a very long period of time, and now he's not going to be able to have that same living situation anymore. So he knows that his rent when he moves is going to go up significantly. However, he also has enough money to support his lifestyle and potentially buy a property in cash if he wants, and then not have the cost of rent. So he's trying to decide, do I want more money and be renting, or do I want to own a home, have less money, and not having to pay rent? And I said, well, one option, because you do not have anybody that you need to leave this money to or want to leave this money to, is you can go and buy yourself a house and then put a reverse mortgage on it and basically have almost as much money as you had before, and just not worry about your estate whatsoever and live it up in retirement. I don't think he's going to do that anyways. He doesn't spend a whole lot of money, but I said I like to try and talk to people with money about giving her in their 60s and having a good time. So that's certainly one option that he could consider that might enhance his retirement and his cash flow. Plus he doesn't have to worry about rising rents and other things like that. So anyway, if you're interested, like I said, just email us and I'll forward your information off to my friend, and she'd be happy to have a discussion with you if this is something that you think might fit into your retirement plan. Thanks again for watching, and we'll see you very soon. Cheers.